May profits be upon you. Let's take a look at USDJPY, shall we? Uh, what do we got here? We got an uptrend, right? Seems pretty obvious. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, breaking structure here. And then a higher low. We did not break that low. We respected it, but we did not make a higher high this time. What price did was create relative equal highs, and that is a magnet for price. We know that it's going to want to take out the liquidity at the top of that of this high. All right, that's that's one thing to note. Close look here. All right. So a couple other things to note is once price didn't break that high, we have to understand that we are still in this trading range. This is the last high, the higher last higher high, and this is the last higher low. This is the trading range. Until price breaks this low here, until price breaks this low, we are still bullish. We break that high, we make a higher high, and we just have continuation of the trend. But the low is what would really mean a shift from bullish to bearish momentum. Okay, so within the trading range, these higher highs and higher lows, that's substructure or microstructure. This is the main structure, the swing high, the swing low. Got it? Good. We found a demand zone, right, that price came down into and respected. Mitigated this order block 2 times, and it responded bullishly. We did take liquidity here. We did take that low. Price did run that low for liquidity and came up. You want to see that before a move is made. You understand the liquidity hunt. I always look for those things. Those things have meaning. All right, let's go to the 4 hour. And what do we see? We see the equal highs up here, right? But now we're on the 4 hour structure. All right. So what was a substructure on the daily is now actual swing high, swing low on the. It's actually swing structure on the 4 hour. So what do we have? What am I looking at? Right. We got this higher low here. All right, because we know that we're on a larger time frame uptrend. So we got higher low. Uh, this one actually is lower. So this this the breaking of this would mean this is we actually made a technical lower low. All right, but we didn't have a close below it. So for me, it's just a grab of liquidity, sell side liquidity. But we do make the higher high. All right, break that high, make the higher high, higher low, higher high, higher low. Right, this isn't really a higher low. Why? Because it didn't make a higher high. This is just a uh, a, a microstructure swing low. All right, it was potentially a high, a higher low to make a higher high, but higher lows only make higher highs. All right, just like lower lows, uh, lower lows are only made by uh, higher highs. Higher highs make higher lows. I just messed that all up, right? Okay. Anyway, this isn't a higher low because it didn't make a higher high. Okay. So what is this? That's a lower high. It's a lower high only after it breaks structure to make a lower low. Got it? I hope you understand. That's the way it goes. All right. So with that in mind, That in mind, uh, what are we waiting on? Price came down to what was it, that higher low here, right? Came down to it, all right, with substructure into that, but respected it, did not break that low. And then we broke some more structure to the upside, more substructure to the upside. We have a break of substructure to the upside, which is telling us that there was a shift from bearish to bullish momentum, right? Good. Now, also, this is a strong low. Why? Because its job is to make a strong high. You have to. It has to do something in order to be a strong low. It has to break structure. It has to make a new high. That's the job of a low. A low makes a high, a new high. Okay, so it did that job. But what is the job of a high? Should be able to make a new low. It didn't in this case. What does that make it? Weak. That's why that yellow line is up there. It's a weak high. That means it is vulnerable to liquidity hunting. It's going to be a liquidity point in price. The market makers are going to take it up there for that purpose at some point. Doesn't have to be immediately, but it will happen because it's weak. It didn't make a new low. That, and it's already a relative equal low already, already a magnet. So that's what we're waiting on for price to end up jumping up there to make the higher time frame higher high. That is the expectational order flow that we're following here, right? Higher high, higher low, not a higher high, but we have two successive higher lows are being made here. So the expectation is for price to make a higher high because we're in an uptrend. That's the expectation. Now, if it doesn't get up there, if it doesn't get up there, then we'll adjust. But it has to break this low in order for us to say, okay, we've turned bearish. I hope everybody understands that. Okay, so back to the 4 hour. All right, we do have a break of microstructure to the upside, substructure to the upside. So what am I expecting from here? Do I expect price to continue down, or do I expect price to retrace? After every break of structure, there's always a return to impulse or a return to origin. All right. And I would be looking somewhere in this vicinity for price to come down and up. All right. Maybe we get it around this area. There is a sell to buy here, a sell to buy move. All right. So, somewhere around there. But, if you put your Fibonacci on that, if you put your Fibonacci on this, what you want to see is price come back below the 50%. Because uh, this is premium pricing above 50%. This is discount pricing below 50%, and you want the discount price. So anything, I like to see something come around this area, the 618. I want to see a 62% retracement and then up. So that's what we're looking at on this time frame. Okay, you can get off there. All right, so let's go to the 15. I like to look at the 4 hour, the 15, and get my entries on the one. All right, so on the 15, what do we have? All right, we can see this break of structure to the upside here. Now, again, on the 15, this is no longer substructure. This is actual structure. And the structure actually is at a lower low, a lower high, lower low. This is the structure. Once we broke that, we had a break of structure to the upside and we turned bullish. We are bullish here. Then we consolidated and broke this very important piece of structure there. And that is another structural break to the upside. We have a pullback, a higher high being made here, still bullish. All right. And here we come down. Boom, 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 boom. And look, we broke structure again to the downside. We are bearish now. We have shifted from bullish momentum to bearish momentum. What am I looking for? Why you think I got these arrows here? I'm looking at these possible landing spots for price to return to impulse or return to origin, and then find that higher low to go ahead up higher to make that higher time frame higher high. Because the higher time frame rules the smaller time frames. All right, and they give the targets for price. Actually, this is supposed to be green. I don't know why it's that color. Okay, so let's take a closer look at this. And I want you to understand there is a reason why I picked these POIs. All right. One, because I'm looking for imbalance leading into these order blocks. Right. This is a this is demand. This is demand, and uh, the the uh, the fair value gap is from you're looking at an inefficient price movement here, right? And when you have inefficient price movement, the market will come back and fill that gap. All right. What you want to see is this kind of gap here. It's measured from the wick preceding that big bullish movement, that big momentum candle, the one that precedes it, that the top of that wick, and the one after it, the bottom of that wick. That is how you measure. That's how you cite uh, the fair value gap or the imbalance. And when you have imbalance going into a uh, doggone uh, order block, there's a good chance. It betters the chance. It's kind of like having more motivation for price to want to get to that demand zone. Okay, so in these cases, the price moved efficiently. You know, from here, you see this wick came all the way down, taking care of this imbalance here. All right. The order block actually begins here with a selling to buy. That's a sell to buy. That's where the orders started to sell off and buy. So you mark the order block that way. You know, we don't need to see this one here. Uh, this is the near the extreme. This is the extreme. All right. This is near the extreme. This is some people will call a decisional order block, or maybe price only comes this far and turns around here. We'll see how price reacts when it gets here or here. If it comes through this, then we'll look here. All right. This will be the first place we look at. These are our POIs. And something else. You want to measure this with a Fibonacci, right? And uh, you see how the 618 lines up with this area? All right, this is the golden ratio. And this is one of the most frequent. This one gets the most frequent hits on the Fibonacci retracement tool. Okay, look up golden ratio of the Fibonacci on Google, and you'll see there's a lot of information about it. But we see that price is coming down here, so we're going to see what price does once it gets here. See how it reacts, and what we're looking for is something like this here. Boom, 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 boom. That's what we want to see on a smaller scale. All right. We'll look for it on the smaller. We can look for it on this time frame or the smaller time frame. We just want to see something like that here, Oops. Right? Or down here. All right. A low, a swing, a pullback, a lower low, a break of that swing high, come back as a return to impulse or return to origin after it breaks structure, and then up. That's what I've been describing throughout this video. So that's what we're looking for. Uh, I was hoping that price may return up here, but that's fine that it doesn't, because it would have given me a nice price to take a short all the way down here. But that's fine. It's going to fill in this inefficient price movement here, and we'll see what it does when it gets down here. I hope you find this video helpful. If you want to see some more free training, free analysis, get make sure you smash the like button and subscribe and share. And share it with your friends. All right. I will see you in the next video. I appreciate you taking a few moments to spend with me, and I hope you find benefit in that time spent.